Hey everyone, and welcome to the Coso Capital Podcast, where we discuss wealth building and personal development. We are real estate investors and lenders. And on this show, we share our experience on what's going on in the market, experiences, and books we're reading, and so much more. In this episode, we are going to do a deep dive into the Rich Dad Poor Dad book. I know I've mentioned a few notes here and there on the book. I told you I love the book. It was kind of like my uh, catalyst to get started in real estate investing. Um, and I'm gonna go do a big deep dive in it. We're gonna nerd out on it. So I hope you enjoy that. Now, I'm going to recommend you 100% read the book after the fact, but we definitely want to go over some of those main points. A lot has been going on as of late. We've been pretty busy, both on the mortgage side of things, on the mortgage business, and also on the side of real estate investing. We actually have converted one of our units at our apartment community into a furnished rental and got our first booking, which is really exciting. We're making a lot of adjustments, done a lot of reading on the site, so I'll do a whole episode on the topic. But I will tell you, it's learned a lot. This is the first short term I've done. I've done long term for many years, probably for about 12 years. And this is the first short term I've done. But I'm not really even looking to do short term. I'm looking to do something called midterm, which is about 30 days minimum to 6 months or a year, but really furnished and see if that can increase our revenue. But we'll talk about that later. Last month closed two loans, one for an investor, one for a first-time home buyer, which is really exciting. Did a loan for a friend that he's building houses in Central Florida and was able to do a $1 million plus loan for him to build. He built custom homes. So if you need a custom home in Central Florida, let me know. I'll put you in contact with him. And did a home for a home buyer and a veteran, right? So a couple. They're first-time home buyers. It's just an exciting thing. Now they own a property. Then they're looking to, go up the wealth ladder. Now they're going to, homeowners build wealth. The number one way to build wealth is by owning a home. And then, the next way is start accumulating investment properties. And we already, talking about that, which is really exciting. And the last thing is we also have our development going. So a lot of balls up in the air. And really couldn't do it without the help, number one, the wife, and then also we have a management assistant and our freelancers, and really need to get more help down the road because it's really getting busy, and really thankful for that. But we have our methodology approved for our traffic study. So a methodology are the rules that you're going to follow when you do a traffic study. So you submit that into the city. We're doing a big development. It's about 417 units that we're building ground up, plus another 42 we have on the site. It's going to be a total of nearly 460, 459, really, to be exact. And now we're going to be able to do a traffic study, but we need to follow the rules and the methodology. And we just got the methodology approved. The traffic study is in the process, so we can get that submitted. And the traffic study is required by cities, counties, municipalities to evaluate the traffic impact to your project in the market. And then that tells them maybe if you're going to need a new traffic light, any traffic signals, and any other things. If the development is too big, if it's too small, it's going to share all these things. New roads, it gives them that information. So we'll talk about that once it's complete. Kind of maybe I'll do an episode and just go over it from beginning to end. It's another nerd out situation if you're into development, but it's good to know if that's something interesting to you. Now, before we get into the book, let's have a word from our sponsor. So if you're looking to buy a home, refinance, home loan, or purchase an investment property or business, we do SBA loans too. Coastal Capital can help you get the capital you need, and you're getting it from someone that's an actual investor. So you're getting some advice from a professional, someone that's actually in the trenches doing the same thing you're doing. And contact us. Denny at cosocap.com, COSOCAP.com. Would love to help you. Currently licensed for homeowners in Florida, but throughout the country if you're an investor in so many different states. Residential and commercial, Denny at cosocap.com. NMLS 388985. And realtors, if you're listening, we are always looking to build our realtor relationship. So let's work together. Now, let's get into the book. And so again, the book is called Rich Dad Poor Dad. The author's name is Robert Kiyosaki. I can't remember how long ago it was written, but I think it was nearly 40 years ago that he wrote the book, and it was a bestseller at the time. And he went on Oprah, and it was just, a big thing on the book. And the book, the setting is just the story is he shares his story growing up, how he had his real dad, what he calls his poor dad, who was really highly educated, and he had a rich dad, which was really his friend's dad that the friend's dad was a didn't have a lot of formal education from college, except but he was really wealthy because he owned a lot of businesses and he had a lot of real world education that he obtained through reading and taking seminars and different things. So he goes through this process growing up. He goes from his experiences with his rich dad and poor dad as a child, and even he talks a little bit about how that impacted him as an adult in his investing career. So it's a really powerful book. And the thing is, it's written at a really great level, simple way to understand investing, simple way to understand wealth building. He's a really good writer. I'm a big fan of Robert Kiyosaki. All his books, if you can read them, I highly recommend them. It's going to give you a good background on wealth building. And every book has a little nugget. So he's really good at what he does. So he kind of, makes you continue reading his books. So you want to get all the nuggets. The courses, I've been to one of the main courses, and that one, it was like a big, kind of selling different areas, different specialties, and you could consider that. But I have talked to people that didn't have good experience with that, so that's up your decision. But the books, I highly recommend. I highly recommend the books. All right, so one of the first quotes is, "I can't afford it." Is that what people say? But he says instead, you want to change that to changing your mindset to say, how can I afford it? Because when you say I can't afford it, it kind of closes your mind. But when you say how can I afford it, it opens your mind to think in ways now how you can impact that. Now, let me go ahead before I forget. I'm going to go ahead and share my screen so you can see the book here. Share. Let's see here. You should be able to see that. Let's see here. Can you see that? That's the book there. So, and then Robert Kiyosaki, right? All right. So this book that you see, I think you see it here. And get my notes here. So that opens your mind. Study hard so you can find a good company to buy. So instead of study hard to go to get good grades in school, study hard so you can find a good company to buy. And this comes to the opportunity of buying businesses, existing businesses, so you can analyze them and do well. And then the study hard part, it actually works this way, where you really need to look through a good number of businesses and you need to know what you're looking at so you can find a good business to buy and own. And there's actually a big opportunity with that right now with buying a business if that's something that you're interested in, you want to own a business. Now, it is something it's hands-on. It's not like a passive thing per se, unless you're buying a larger company. But that is something that's an opportunity. So his dad taught him, his rich dad taught him, study hard so you can find a good company to buy. The other dad taught him um, how to study hard, get good grades, get a job. The other things he taught him, the rich dad, were how to write strong business and financial plans so he can create jobs, to be totally financial self-reliant. He said, I'm a rich man and people don't do this. So he would kind of change his mindset. He's like, okay, lotto tickets. I say, right? If you look at statistics, it's a lot of rich people. They don't really buy lotto tickets. So he put that into his mind. It's like, I'm a rich man and rich people don't do this. And it will kind of train him, even from a poor level, before you're rich, right? You got to think rich before you're, and I really like the word rich because it sounds a little glitzy, but more wealthy. You got to have that wealth mindset, right? And you need to think that way. So a rich person wouldn't do this, so don't do that, right? A rich person wouldn't spend all this money that they don't have, so don't do that, right? So that's kind of start getting into that mindset. Money is power, and study to be rich, to understand how money works, and to learn how to have it work for me. So study to be rich, to understand how money works and to have money work for you instead of working for money. It's kind of that whole premise throughout the book. I don't work for money, money works for me. Money is one form of power, but what is more powerful is financial education, right? So having the money gives you power to make certain decisions, but having the education, even if you don't have the money, it kind of gives you power because now you can control money because now people come to you to help you so you can help them with their money, maybe to buy investments and you can partner with them. And they don't know how to do it, but you do. That's why they say if a person is, if a rich person, if they take all the money in the world and they spread it around everyone, the rich people will end up with the money again because they have the knowledge, right? So you think about it that way. Says, look, school is very important. You go to school to learn a skill or profession to become a contributing member of society. Every culture needs teachers, doctors, mechanics, artists, cooks, business people, police officers, firefighters, and soldiers. Schools train them so society can thrive and flourish. Unfortunately, for many people, school is the end, not the beginning. Rich dad. And I see this. We have this mindset that we kind of are ingrained, and it starts with probably elementary, middle school, high school, and even our parents. It's like, okay, you're done with school, you're done. That's it. And I think you're exhausted, right? Because you've been pushed through school, studying things sometimes that you don't really even care about and like. And now you're like, I don't want to go back to school. It's not my thing. But I think if you look at it from the point of view that this is, you learn on things that you really like and you develop that. If it's your business, let's say you start a pool business and you love pools, you love learning about that. Going to school for that, it's completely different than going to learn calculus, right? If you had no interest in learning calculus. But if and then and school can be different things. School could be reading a book. School could be reading an article, taking a seminar. It doesn't have to be go getting a college degree. It doesn't have to be uh, taking an online course. It's just so many varieties of schooling. And I think that's one of the opportunities in the age that we're living. We have so many opportunities with that, so many choices. Quote says, when emotion goes up, intelligence goes down. Emotion goes up, intelligence goes down. And this is make decisions without emotion. Let the numbers speak for themselves. He talks about it in some of his books. I don't know if it's this book or another book where he say, um, a man to be able to understand an investment, you don't look at it through your eyes. You look at it through a different part of your brain. I forget how he explains that, but it's you have to know how to look at an investment and say, okay, is this going to generate the right returns for me based on my goals and my financial needs? So then you control your emotions and you know, okay, it meets these things. I know I'm nervous. I know, I have these concerns, but the risk is low enough that it's worth taking, right? And that's the intelligence that using that instead of emotion. And this is also the stock market, right? Stock market goes up and down. It's been going a lot up and down lately. But if you have, you're investing long term, you're investing consistently, you have savings, you have low debt. Now your emotion can be under control and your intelligence is up, right? So you can manage that better. Because then if you get emotional, then you'll sell at the bottom instead of buying at the bottom, right? Which that's what you should be doing. When stocks drop, you're investing long term, you should buy more, right? Continue investing so you can earn higher returns over time, right? Mike and I were casting 5-cent pieces out of lead, thinking we were making money. We were very close to thinking the way the rich think. Money is an illusion, truly like the carrot for the donkey. It's only out of fear and greed that the illusion of money is held together by billions of people who believe that money is real. So there's an example in the book, and I've read the book a couple of times, and at the beginning I didn't really catch it. I was like, what are they talking about? Lead, this and that. Well, we didn't grow up in this. I'm 38, and when I grew up, mostly toothpaste was made out of plastic, right? The thing that hold the whole tube, the tubes. But before, toothpaste tubes will come in lead. And he was talking about in the book where him and his friend, they wanted to make money and they took the toothpaste tubes and they collected them and they melted them and then they would use that to create certain coins, right? And then it's so kind of coins are made, supposedly is like silver or whatever they're made out of. some type of metal. And then they would use that to buy things, but they never did it, right? Because technically it's counterfeiting, right? You're making false coins. But what they said when he's talking to his rich dad, he says, you're very close to thinking how rich people think, because rich people think, how can I use my brain to create money, to just get it to pop up? And so that's a kind of that mindset, using creativity to show money. So you provide a service, you get money. You provide something, you get money. So I really like looking at it from that point of view. Seeing what others miss. The sooner you forget about needing a paycheck, the easier your adult life will be. Keep using your brain, work for free, and soon your mind will show you ways of making money far beyond what I could ever pay you. The sooner you forget about needing a paycheck, the easier your adult life will be. And guys, this one is a really difficult one, because if you have stability and if your personality is needing a paycheck and you want to get away from that for whatever reason, maybe you're upset with your job, maybe you want to have more financial freedom. Number one, having a paycheck is not a bad thing. I'm not that person to say, oh no, everybody needs to quit their job and you need to, work for yourself and all that. That's not for everybody, right? Having a job is great for some people, but if they have the right career, they're working at the right place. And what I recommend is you should focus on making sure you have your investments taken care of in case something happens with the job, where you have a backup plan that, some fallbacks with, and it gives you time to find another job while you get organized with that. So I'm all for having a paycheck. Now, what happens is people that they want to get out of the paycheck, and if you have a lot of debts, it's hard to get out of it. But even if you don't, paychecks are like an addiction, right? You really need um, to like it's just hard to break that. It's kind of like kind of like a drug, right? You're getting that every week, that check. You're getting that check every 2 weeks. That check is gonna want to keep you going. So every 2 weeks, you're like, man, I'm getting that check. When you're self-employed, you may not get a check for a few months, right? I'm doing it when I'm focused on real estate investing. I get my rental checks, deposits. Sometimes maybe the property needs more work, and then there's no deposit that month, right? So we have reserves that take care of us in that situation. Or let's say, in the mortgage business, it took several months, 6 months to just have the first closing, right? So sometimes things take time, but if you don't have that mindset, then you can't get to that, right? So it takes a little bit of time to start disconnecting from the paycheck. It's attractive, right? Maybe, for me, even I work for myself, been working myself for like 15 years. If, I've gotten offers for jobs or, places to apply, you fit this description, you're going to make 200,000, 250,000. Man, a cool $20,000 a month. Of course, everything comes with responsibilities, hours to work, etc. But having that paycheck is addicting, right? Having that paycheck is that stability, right? Instead of having what I call eat what you kill, which is going out and generating your own business. So the sooner you forget about needing it, the easier your adult life will be if the goal is to be entrepreneurial, self-employed, etc. The moment you see one opportunity, you'll see them for the rest of your life, right? So it's kind of like a mindset. You're turning into that mindset of, oh, looking at opportunities. Intelligence solves problems and produces money. If your pattern is to spend everything you get, most likely an increase in cash will result in an increase in spending. And this is a good one. If what you need to realize is, if your income goes up, don't increase your expenses at the same level of your income. It's okay to live a little bit more comfortable, but maybe set some rules there where you're like, okay, I'm gonna live 50% better with this raise, but I'm gonna take the other 50% and I'm gonna go ahead and invest that money so I can have more cash flow to generate to get investments or for some other goals, right? So try to set some boundaries in there so you don't get your expenses don't go up so much. If your pattern, let's use an example. Let's say I have cash flow from my asset column of 1,000 a month and I have monthly expenses of 2,000. What is my wealth? Well, he talks about Buckminster Fuller. Buckminster Fuller, they call him a futurist. He built, he was an inventor many years ago, probably about 30, 40 years ago. And he said, this is his definition. Assuming a 30-day month, I have enough cash flow for half a month. When I achieve $2,000 a month in cash flow from my wealth, then I will be wealthy. So let's say if he says this was his definition of wealth when your cash flow outside of your job covers your monthly expenses, that is wealth. So if it pays for itself, then you're wealthy, right? And then if you earn more than that, then your wealth is even higher than that. So I like that example. So if you have monthly expenses of 2,000 and you have $2,000 in cash flow from the asset column, that's talking about, let's say, your stocks that pay dividends or multifamily properties, or let's say you wrote a book and you're getting royalties or something like that, and you get $2,000 a month, that is your wealth. Then you're wealthy because now you don't have to worry about anything. It pays for all your bills. Now, if you want to be really comfortably wealthy, according to this example, then you want to have really double that income. So maybe you're making $4,000 a month and your expenses are only 2,000. So now you have a cushion, right, in case something happens to your wealth, because wealth does fluctuate with the income. The rich buy assets. The poor only have expenses. And when we're talking about assets, we're talking about assets that generate income. That's what he talked about in the book. He talked about, uh, I mentioned rental properties that generate positive cash flows. Talk about businesses that generate income, positive income, not things that have expenses like your primary home. It is a way to build wealth, but it's still an expense. So you still need a place to live, which I'm all for it. But the asset we're talking about here is assets that generate cash flow. Let's say if you have a rental that's also connected with your primary home, maybe that'll make it work. But if it's just your primary home, then that's not exactly what we're talking about in this example. The middle class buy liabilities they think are assets. So sometimes that's talking about primary home. And then we're talking about, let's say, boats and cars. Those things are expensive. They don't really generate cash flow. Unless maybe you're using Turo, right? For your car. That can generate cash flow. I have a friend that's doing that, and he's doing really well. So check that out. Wealth is a person's ability to survive so many number of days forward, or if I stop working today, how long could I survive? They spend their lives minding someone else's business is the problem and making that person rich. To become financially secure, a person needs to mind their own business. And we're talking about your own business. That doesn't mean you need to be an entrepreneur. You need to manage your investments. You need to invest your money and understand how that works. So you have two professions. No matter what you do in life, you have your profession, your day-to-day, how you earn your money, but then you also have what your money does. And does your money invest in real estate? Does your money invest in the stock market? Where do you keep your money? And how do you grow it? Right? So you can live comfortably in retirement, so you can have a good return on investment. Uh, Keep expenses low, reduce liabilities, and diligently build a base of solid assets. Diligently build a base of solid assets. This is, I mean, that's straight cut, right? Keep the formula clear. This is a key about there. I love that because I really believe in that mantra. Keep the expenses low as possible. That gives you a lot of flexibility. We're putting a lot of money out right now for our development, and right now we have cash flow from our apartments. I'm building a mortgage business. But it's not like cash is just flowing in, but our expenses are low. So we have a lot of flexibility until that's approved, which is going to be a really great investment in a few years, right? So that's something that if you have a lot of expenses, then now you're like, okay, I can't really start this business because I really need something that's more consistent. I need something that's solid. It may take 6 months to a year, but I don't have that time. So those are all things that you really need to worry about, right? So what kind of ads am I suggesting that you or your children acquire? Businesses that do not require my presence, I own them, but they are managed or run by other people. If I have to work there, it's not a business. It becomes my job. Stocks, bonds, income generating real estate, notes, IOU. So these are notes that people owe you. So you let people borrow and you give them your money and they make payments to you. Royalties from intellectual property such as music, scripts, and patents. We're talking about anything else that has value, produces income, or appreciates and has a ready market. Has a ready market. So these are all assets on ways on what he's talking about. Rich dad, anything else that has value. So rich dad encouraged me to begin acquiring assets that I love. So that's another thing. Do things that you love. Don't do investments that you don't like just because, oh man, I have to own these investments. No, focus on the investments that you like, the ones that you like learning about. So then you can put in the necessary time and effort to be good at it, right? So you can, because that's the only way that you're going to be successful at it. You have to put time and effort. You have to read. You have to learn, right? So you can make better decisions. Don't just rely and put your money in the hands of someone and say, hey, take care of it without you understanding at least the basics. No matter if he's a financial advisor and has so many degrees or whatever, right? You want to understand, be an educated client. Be an educated client. I collect real estate simply because I love buildings and land. I love shopping for them, and I could look at them all day long. I also love stocks of small companies, especially startups, because I am an entrepreneur, not a corporate person, right? So he's kind of telling you his mindset, and so you can copy it, which I really like. I like getting into people's minds, like, how did they make their decisions? Because that helps me to make better decisions. With small companies, my investment strategy is to be out of the stock in a year. There you go. Investment strategy there. My real estate strategy is to start small and keep trading up for bigger properties and therefore delay paying taxes on the gain. I generally hold real estate less than 7 years. So that's some 1031 exchanges he's talking about there. And he talked about he doing holding for less than 7 years. This was his strategy, guys, like about 20, 30 years ago. And he redid the book. This could have changed. You don't need to do the same thing. You need to understand what other people are doing and do what's best for you. Do what's best for you. The better I was at understanding the accounting and cash management, the better I would be at analyzing investments and eventually starting and building my own company. When I say mind your own business, I mean to build and keep your own asset column strong. A true luxury is a reward for investing in and developing a real asset. Knowledge is power, and with money comes great power that requires the right knowledge to keep it and make it multiply. Rich people are often creative and take calculated risks. Now, that's the key thing. It's not taking crazy risks, it's taking calculated risks. And when I say calculated risk, risks that have a high probable outcome of success. There is nothing that is risk-free, right? If we walk outside and we drive to the store, there's a possibility we can get in an accident, right? It's not probable, but it's a possibility. But we decide that we're going to go to the store and we're going to drive at the speed limit, and we're not going to drive 50 miles over it to not have an accident, right? So we don't have an accident. That's the same thing that you're doing with these investments. You're looking at investments that meet the speed limit that you have, that you can drive safely to have success. And you try to lower it, find this investment, okay, I'm comfortable with this one. It has, the price is right. It needs small renovations, or it already has a tenant in place, it's already cash flowing. It's low probability of failure, high probability of success. Right? That's what you're looking for. And then the goal is to find the ones that have the lowest probability of risk with the highest probability of success and return. And that's another conversation. All right. The rich make money. The more real you think money is, the harder you will work for it. If you can grasp the idea that money is not real, you will grow richer faster. You will grow richer faster. Money isn't real. Money is a made-up thing that governments and people have made, and they're saying it's a medium of exchange, right? So the only thing you have to do to get more of the medium of exchange that we need to do is we need to provide more services and be more of value, right? And if we do that, then people are willing to pay us for our services or for our products that they find valuable, and then we can take that same money that's made up and we can buy things that we want, whatever it is, whether it's travel, eating, going out to eat, stuff I enjoy, and also doing things like supporting causes you care about, right? Because that's also what money is for. It's not just, to waste and to splurge, which that's fun too, but also to support people that may not have the same type of mindset, the same type of education, same type of development that you have. So that's something that I'm excited about, and that why I really talk a lot about wealth, because it just gives you so much opportunity to do certain things. Uh, this says foreclosure opportunities were still available, but became rare. It cost a valuable asset, my time, to go out looking for them. So he's telling a story here. He took in a foreclosure class. He said he made over $1 million investing in foreclosure properties, but he said the market had changed. It was time to move on and look for other opportunities to put in the asset column, right? So now foreclosures were tight to find. So before, maybe you go to the place to buy foreclosures, and man, there's tons of them. Right? So you don't have to put a lot of time and effort to find one. But now To find an opportunity, you got to go through hundreds, maybe even thousands of properties, right? So your return on time is low, right? Because you have to go through so many properties to find one. So now instead of looking for foreclosures, maybe he started looking for something different, right? Maybe he started saying, hey, you know what? Multifamily apartments look like they're at the bottom of the cycle, and I'm going to start investing in that. So that's an opportunity, or maybe it's the stock market. Maybe you know what? Maybe I'm going to start owning some stock because companies are undervalued. They should be valued more, but they're not. So I'm going to buy them now, and I'm just going to hold them for a while. So nothing is get rich quick, but analyze different opportunities to see what's the best asset to investing at that time. And you can continue investing in the same thing, but this is some interesting strategies that I really enjoyed listening to in the book or reading about. My educated dad admitted that schools reward people who study more and more about less and less. Rich dad encouraged me to do exactly the opposite. You want to know a little about a lot. You want to know a little about a lot. I thought that was powerful. Job security meant everything to my educated dad. Learning meant everything to my rich dad, right? So job security meant everything to my rich educated dad, but learning meant everything to my rich dad. And closing up here, Rich Dad advised that Mike and I groom ourselves. Many corporations find young, bright students just out of business school and begin grooming that person to someday take over the company. Do not specialize in one department. They are moved from department to department to learn all aspects of the business system. So how do you beat laziness? The answer is a little greed. YIIFM. What's in it for me? What would my life be like if I never had to work again? What would I do if I had all the money I needed? Who could I help? Who could I support? Without that little greed, the desire to have something better, progress is not made. I added the support who can help. That's just me. Our world progresses because we all desire a better life, right? What I know makes me money, but what I don't know loses me money. This is Rich Dad. Just like Texans, don't bury your losses. Be inspired by them. The Alamo, right? So Texans, they don't keep their losses a secret. They learn from their mistake and they grow from them. In reality, the only real asset you have is your mind, right? So that's your education, your knowledge. 90% of the population buys TV sets and only about 10% buy business books. So keep that in mind. What are you buying? What are you investing? Nothing wrong with watching TV, but how much time are you spending learning and educating yourselves? I've noticed that my friends and with money talk about money, right? And then I noticed this too. People that, it's not a natural thing in the Latin Hispanic culture and also even in English culture. People don't naturally talk about money. I think we should talk more about money and not about necessarily I have this amount of money or you have that amount of money, but let's talk about investments. Hey, what are you investing in right now? How is the investment going? What is not working? What is working? What have you learned? So we can support each other and we can grow wealthier together, right? Those are, I think, opportunities that we're just leaving on the table when we have a lot of smart people that are wealthy right around us. And wealth shouldn't be a secret. It shouldn't just come from the house and you talk to your mom and dad, hey, how do I build wealth? This and that, or I'm in debt, or I have this problem. Talk to your friends. Say, look, I made this decision. I made this, it's not going well. What do you think? You say, oh, well, I did this, I did that, or you should talk to this person there. Smart investors don't time the market. If they miss a wave, they search for the next one and get themselves in position. This is hard for most investors because buying what is not popular is frightening. It's going to talk about the same thing here. Page 288 and 289. It is how fast you learn. So this was, let me see here. This one was kind of stood out and it was pretty big. And it said, when it comes to money, the masters generally have one basic formula they learn in school, and it's this: work for money. The predominant formula I see in this world is that every day millions of people get up, go to work, earn money, pay bills, balance checkbooks, buy mutual funds, and get back to work. If you're tired of what you're doing, you're not making enough, it's simply a case of changing the formula via which you make money. When I was 26, I took a weekend class how to buy real estate foreclosures. I learned the formula. The next trick was to have the discipline to actually put it into action, what I learned. That is where most people stop. For 3 years, while working for Xerox, I spent my spare time learning to master the art of buying foreclosures. I've made several $1 million using that formula. So I mastered that format. I went and searched for other formulas. For many other classes, I did not directly use the information I learned, but I always learned something new. I have attended classes designed for derivative traders, commodity options traders, and chaologists. I was way out of my league, being in a full room with doctorates in nuclear physics and space science. Yet I learned a lot that made my stock and real estate investing more meaningful and lucrative. Most junior colleges and community colleges have classes on financial planning and buying traditional investments. They are good places to start. But I always search for a faster formula. That is why, on a fairly regular basis, I make more in a day than many people will make in their lifetime. Another side note, in today's fast changing world, it's not so much what you know anymore that counts, because often what you know is old. It is how fast you learn. This is it. Powerful. Powerful. What I find funny is that so many poor middle class people insist on tipping restaurant help 15 to 20%, even for bad service, but complain about paying a broker 3 to 7%. They enjoy tipping people in the expense column and stiffing people in the asset column. That is not financially intelligent. And I kind of see that too. People don't want to pay for financial advice, especially if, you know, they're low middle class or in that financial situation. They don't want to pay people for their service. They'd rather try to do things themselves when they're not really good at it. And then it kind of comes to bite them in the butt. And I'm the person, I like to do things myself, so I get it. But at the same time, there's certain people you just need to pay them for their service so you can get great work done, like an accountant, a good attorney, if a broker that's bringing you deals that are good deals, off market. I mean, you need to pay them really well, right? Because they're making you rich. Um, Anybody there, be willing to pay people. If someone's giving you advice, hey, how much do I need to pay you for that? Because now when you're easy to work with and you compensate people well, they want to help you. They want to go above and beyond to help you. So keep that in mind. One of the management skills is the management of people. Many people only manage people they feel are smarter than them and they have power over. Many middle managers stay middle managers because they know how to work with people below them, but not with people above them. The real skill is to manage and reward the people who are smarter than you in some technical area. This is why companies have a board of directors. You should have one too. In the world of the asset column, being an Indian giver is vital to wealth. How fast do I get my money back? What do I get for free? These are all questions you should ask yourself to calculate your return on investment or ROI. Last couple points from the book. Wise investors must look at more than ROI. They look at the assets they get for free. Once they get their money back, that is financial intelligence. What would our heroes do in this situation? How would Buffett analyze this trend? How would Jorge Perez negotiate a real estate development? If you haven't heard of Jorge Perez, look him up. He's one of a top Hispanic investor. Find heroes who make it look easy instead of the ones who make it sound hard. Give what you want first, and it will come back in buckets. So, and this is, sometimes we're like, hey, how do I have more friends calling me? How do I have stronger relationships? How do I do this? Be giving, call your friends, call people, and you're probably going to get more calls. That's give what you want and it'll come back in return. Give what you want, it'll come back in return. Same thing with wealth. Stay, come back to wealth. Right now, I wish I had so many help in so many areas. If people would come, hey, look, these are some of my skills. If I can help you in any way, I would love to. I don't mind giving people, some time to chat with them and point them in the right direction. But let's trade something. Hey, if I have these skills. If I can help you in any way, let me know. I mean, oh man, this person I could contact for these skills. And I don't mind paying them or trading services because I know that, what goes around comes around. So in a few that's the last point from the book. Really powerful book. I hope you got a lot out of it. I'm gonna do some more reviews on this. Let me know what other books, top books you're like, hey, you should really do this book. I've read probably over 700 books. I have on my list of my Goodreads, as you could probably see here. And this is the Goodreads. If you haven't checked it out, you should check it out, and then you should follow me on there if you're reading books. Start with one book a year. Start with audiobooks. I read a lot of audiobooks. I do a lot of that. But really powerful. Just a couple closing words. If you're interested in learning how to invest in real estate, send me an email, denny@cosocap.com. We're currently planning online and live events, right? So send me an email so we can have your information. And when that rolls out, we can let you know. You'll be at the top of the list and maybe there'll be even some discounts. Denny@cosocap.com. If you would like to send in topic ideas, questions, or examples on how you organize finances, case studies, etc., email me, denny@cosocap.com. I'm trying to get better ideas for the show to improve it. And we'll go over them on the show. Denny at cosocap.com. And if you haven't yet, please subscribe, like the show. It helps other people find it. Comment on the show. Helps the algorithm. They like that. And what did I say? Share with 10 friends. Share with 10 friends. Thank you guys. Hope you got a lot out of it. Bye-bye.